Good morning. This is Chris Robinson, Robinson Ag Marketing with today's pre-opening grain and livestock comments. Well, 52 cents, kids. That's how much we've come since October 1st in November beans. We hit a new high for the move last night at 10.45 and a half. We're now currently down a penny and a half. A 3 cent range overnight. That was seemed kind of odd. For corn, a 2 cent range. For wheat, about 4 cent range. So a quiet overnight move, but again, uh, if you're long soybeans or if you have soybean risk and you're not doing something with 52 cents in a year where we had a dollar four trading range from top to bottom from 1075 to 971, I think you need to look in the mirror and say, what are we doing here? You can always re-own it if you think it's going to go another dollar higher, some craziness like that. But we've had a good rally. Reward it, reward it, reward it. Don't just um, hope that it's going to go higher. I can get that, but if you've got beans and you want to hold them, get yourself a new put, right? Roll your put up, capture some of this 50 cents. That's real money. I understand it's not $5, which is what everybody wanted, but we got to take what we got to take in a bad marketing year. Corn trading at 425 and a half. Again, it's nice to be away from 392, which is the contract low in August. That's really what we're defending there. You don't need to go crazy there, but this corn doesn't really get bullish until it can fill, that gap in July. Then we have to go get the 200-day moving average at 438, 439. But again, it's moving the right direction as we enter into harvest. It all comes down to everybody's waited with bated breath. We're going to have this meeting with President Trump and President Xi. I'm sure there's going to be more I call it twit risk, tweeter risk, right? I don't know, Twitter risk. I can't even say it. But yeah, God knows what's going to happen over the weekend on the social media. So there's your risk. Make sure if you're not hedged, you get hedged. November options expire today. Oh, some of you have corn options that expire today. Some of you have a lot of you have November bean options that expire today. It wasn't that long ago. We were really happy to defend 1010 beans. So to be sitting here at 1043, 1045, those puts did their job. What does that mean? Well, we spent 8, 10, 12 cents, but the market rallied 50. That's a heck of a lot better than if you got scared and sold futures. Now you're down there delivering, 1002 beans when we're trading 1043. That's how a put works. People always say, how does a put work? Well, there you go. You lose the value of the put, but you get to make all the money in the cash market. Minus your basis. I know, don't text me, call me, and tell me do I know what basis? Yes, I've been doing this for 32 years. I understand basis. We can hedge flat price. That's what we do. The basis is a whole other ball of wax. I'm not going to go down on that. No issue. But what we can hedge is what we can hedge, and we can hedge 52-cent rallies in corn. In beans. Wheat still, trying to get drug up here with corn. It's nice to see us bouncing higher. We're a little bit lower overnight, 512. That trend line that kept us down since July. Now we're looking to see, can we get to 525? I'd say 525. And if you're not getting my letter, I put all these levels in there. I do the technicals for you, so you don't have to worry about it. I spend an hour every morning and then about 3 hours every weekend doing the technicals. Just based on everything that I've learned in the last 30 years being in this business, starting as a floor trader, and then for the last 15 years, for 18 years, I traded on the floor for my own account. I was not a broker. I just stood there and took risk all day long. And then as of 2010, I started working with farmers and producers. So that's my background. If you're looking for help, give me a call. Oh, real quick, in cattle. There was a story out last night on the social media that there may be some movement here coming up with the um, opening the Mexican border with the screw worm. So we'll see if that happens. So you've got that. If that was to open up, if the border with Mexico was to open up, we got more cattle coming up here. That could put pressure on prices. Again, we've seen this, for 10 months though. where you get a correction and then turn around and go higher. The thing we're all going to be watching is, can feeder cattle get back into the gap, mine the gap? We were down 270 yesterday, and no, March was down over four, 350, 430. So this has been the first real um, substantial correction we've had in cattle. But if you've been following along with cattle, we've seen this before. Last month we broke 25 bucks, and then in 12 days we rallied 35. So you can get caught here if you're not careful. In the hogs, again, we took out the 82 support. Again, if you're not getting my letter, get my letter. I have all these levels in there. But 82 is a big support. If that fails, it pushes us down to the next support level. So hopefully Friday is going to be a good day for all of us. This is Chris Robinson, 312-638-8868. If you need help, give me